900 million people use ChatGPT every single week. That's more than the entire population of Europe, and OpenAI just filed to go public today. The AI IPO wave is no longer coming. It is here. Welcome back to AI Assets, your daily source for the sharpest AI investment intelligence. Let's break down what 900 million weekly users, 50 million paying subscribers, and today's confidential IPO filing actually means for your portfolio. Here are the numbers first. OpenAI confirmed earlier this year that ChatGPT has crossed 900 million weekly active users, up from 800 million just 3 months prior. That's 100 million new users added in a single quarter. On top of that, 50 million paying consumer subscribers, over 9 million paying business users, and revenue projected to hit $34 billion in 2026, with an estimated $64 billion in 2027. And today, June 8, 2026, OpenAI officially filed confidential IPO paperwork with the U.S. Securities and Exchange Commission. The company joins SpaceX, which goes public this Friday under ticker SPCX, and Anthropic, which filed last week. 3 of the most valuable private companies in history are all heading to public markets within weeks of each other. This is not a coincidence. This is a coordinated race to capture the moment, and investors who are not paying attention right now will look back at June 2026 as a turning point. Now let's get into the investor context, because this goes far beyond a headline user number. The 900 million figure matters for one specific reason. It validates the advertising model. Earlier this year, OpenAI began showing ads inside ChatGPT for free and Go-tier users. At 900 million weekly users, even a modest average revenue per user from advertising produces numbers that rival the largest media companies on Earth. Facebook crossed 1 billion users before it went public in 2012. At that point, its advertising engine was still being built. OpenAI is at 90% of that threshold and already has ads running. Now look at the valuation. OpenAI completed its latest funding round in March at $852 billion, backed by Amazon with $50 billion, Nvidia with $30 billion, and SoftBank with $30 billion. For context, that makes OpenAI worth more than Visa, more than Johnson & Johnson, and within striking distance of the entire market cap of Saudi Aramco. But here is the direct stock market implication you need to understand right now. Microsoft owns approximately 49% of OpenAI's revenue rights through its investment and cloud partnership agreement. Every dollar OpenAI earns flows back to Microsoft in the form of compute payments and revenue sharing. When OpenAI's user base grows from 900 million toward 1 billion, Microsoft stock directly benefits. This is arguably the cleanest and most undervalued proxy for OpenAI exposure in the public markets today. Nvidia is the second direct beneficiary. OpenAI spends billions on Nvidia H100 and B200 GPUs every single quarter. More users means more inference demand, means more chips. Nvidia's August earnings report will be the first public signal of how much OpenAI's scale is translating into GPU revenue. Here is what the market is completely missing about this story. Everyone is focused on the IPO filing, the valuation, the timeline, September or later, the Sam Altman problem Reuters wrote about last week. But the number that actually matters is not the valuation. It's the $14 billion projected net loss in 2026. OpenAI is burning roughly $38 million every single day, and 900 million weekly users is actually part of the problem, not just the solution. More users means more inference compute costs. Every ChatGPT query costs OpenAI money. The company is essentially subsidizing the world's AI usage at a loss while racing to build the advertising and enterprise revenue that will eventually close that gap. This creates a very specific risk that no analyst is pricing correctly. If OpenAI goes public at a $1 trillion valuation, the number Reuters is reporting for a September listing, it will be the first company in history to IPO at that scale while running a double-digit billion-dollar annual loss. That is not a reason to avoid it, but it is the reason the post-IPO dip could be severe and fast, exactly as we discussed with SpaceX yesterday on this channel. The smart money will likely sell into the IPO pop and wait. There is also a competitive moat question nobody is asking loudly enough. At 900 million weekly users, ChatGPT appears unassailable. But Google's Gemini, launched aggressively this year, is now embedded in every Google product used by over 3 billion people. The user advantage OpenAI holds today is real, but it is not permanent, and the market is pricing it as if it is. So what happens next? And how do you position yourself? 3 events to watch very closely over the coming weeks and months. First, the S-1 prospectus going public. OpenAI's confidential filing will become public at least 15 days before any roadshow or listing date. That document will reveal for the first time the exact revenue breakdown, cost structure, and burn rate. Watch for it. It will move markets on the day it drops, and it will likely cause significant recalibration of the $1 trillion valuation target. Second, SpaceX IPO day this Friday, June 12th. How SPCX trades on its first day will set the psychological tone for every AI IPO that follows. A strong SpaceX debut creates momentum for OpenAI and Anthropic. A disappointing one could push both companies to delay their own listings into 2027. Third, Nvidia earnings on August 25th. That report will show whether the compute demand from OpenAI, Anthropic, Google, and SpaceX is translating into sustained GPU revenue growth, or whether the market has already priced in peak demand. The answer will determine whether the AI trade has more room to run this year. The smart positioning strategy right now. Build exposure through the public market proxies before the IPO, not after it. Microsoft for the OpenAI revenue relationship, Nvidia for the compute infrastructure, and Alphabet for the competitive pressure that keeps all 3 honest. Direct OpenAI shares at IPO, if you can access them, carry significant lockup risk. The first 90 to 180 days after listing will likely be volatile, as insiders are able to sell. The patient approach, buying the public proxies now, and the direct stock on the first major post-IPO dip, is the most defensible strategy based on how every comparable mega IPO has traded historically. 900 million weekly users, 50 million paying subscribers. A confidential IPO filing dropped today. The AI wave is not building anymore. It is breaking. And the investors who understand the full picture right now are the ones who will position correctly before the crowd catches up. If today's breakdown gave you a new angle on OpenAI and the AI IPO wave, subscribe to AI Assets right now. We do this every single day. the news, the context, and the investor angle the market is missing.